When it comes to business tax returns in Canada, there are specific guidelines and requirements that businesses need to follow. Here are some key points to consider. 1. Filing deadlines. Business tax returns in Canada have different filing deadlines depending on the type of business entity. For most businesses, including sole proprietorships, partnerships, and corporations, the deadline is generally June 15th of the following year. However, any taxes owed must still be paid by the regular deadline, which is usually April 30th. It's important to note that if your business has a fiscal year end that does not align with the calendar year, the filing deadline may be different. 2. Business structure and tax returns. Each type of business structure has its own tax return form. Here are the common forms for filing business tax returns. Sole proprietorships and partnerships. These businesses report their income and expenses on individual tax returns T1 using specific sections like Schedule T 2125, Statement of Business or Professional Activities, to report business income and expenses. Corporations. Corporations need to file a separate corporate income tax return T2. The T2 return requires detailed information about the company's income, expenses, assets, and liabilities. 3. Business deductions. Businesses can claim various deductions to reduce their taxable income. Some common deductions include operating expenses, salaries and wages, business use of home or vehicle, travel expenses, professional fees, and interest expenses. However, it's important to ensure that the deductions claimed are legitimate and supported by proper documentation. 4. GST/HST obligations. Depending on the business's annual revenue, it may be required to register and collect the Goods and Services Tax (GST) or the Harmonized Sales Tax (HST). Businesses need to report and remit the collected tax to the Canada Revenue Agency (CRA) periodically, typically on a quarterly basis. 5. Tax credits and incentives. There are also various tax credits and incentives available for businesses in Canada. For example, the Scientific Research and Experimental Development (SR&ED) tax credit offers incentives for research and development activities. Other credits include the Small Business Deduction, investment tax credits, and the Capital Cost Allowance (CCA) for depreciation of assets. It is crucial for business owners to keep accurate and comprehensive records of their income, expenses, and supporting documents. This will help ensure that tax returns are prepared accurately and minimize the risk of audits or non-compliance. Seeking professional advice from a qualified accountant or tax specialist is highly recommended to navigate the complexities of business tax returns and take advantage of available deductions and credits. Tax installments. If your business has a certain level of net tax owing for multiple years, you may be required to make tax installments throughout the year. This means making periodic tax payments in advance, based on the estimated amount of tax owed for the current year. The CRA calculates the required installment amounts and provides payment reminders. Record-keeping requirements. As a business owner, it is essential to maintain organized and detailed records of your business transactions. This includes keeping track of income, expenses, receipts, invoices, financial statements, and other relevant documents. These records should be retained for a specified period as required by the CRA, typically for a minimum of 6 years. Tax software or professional help. While it is possible for business owners to prepare and file their own tax returns, many opt to use tax preparation software or seek the assistance of a professional accountant or tax preparer. Professional help can ensure accuracy, help identify eligible deductions, and provide guidance on complex tax matters specific to your business. Financial statements. Depending on the size and structure of your business, you may need to include financial statements, such as a balance sheet, income statement, and cash flow statement, along with your tax return. These statements provide a comprehensive overview of your business's financial health and are an essential part of the tax return for corporations and larger businesses. Tax audits. Business tax returns are subject to potential audits by the CRA to ensure compliance with tax laws. During a tax audit, the CRA may review your financial records, invoices, receipts, payroll documents, and other relevant information. It is crucial to respond to audit requests promptly and provide accurate and complete information. Penalties and interest. Non-compliance with tax filing or payment obligations can result in penalties and interest charges from the CRA. Late filing penalties, failure to remit HST/GST on time, and failure to make required tax installments can all lead to financial consequences. It is important to meet filing deadlines and make payments in a timely manner to avoid penalties and interest. Employment expenses. If you have employees, you need to comply with payroll requirements, including deducting and remitting income tax, Canada Pension Plan (CPP) contributions, and employment insurance premiums from their wages. You'll also need to prepare and provide T4 slips to your employees and submit T4 summary forms to the CRA at the end of the year. Business losses. If your business incurs a loss in a given tax year, you may be able to carry it back to previous years or carry it forward to future years to offset taxable income. This can help reduce your tax liability and potentially result in a tax refund or lower taxes in the future. Owner's compensation. For businesses operating as sole proprietorships or partnerships, the owner's compensation is not considered a separate business expense. However, for corporations, paying reasonable salaries to owners or shareholders for services rendered is an allowable deduction. It's important to ensure that owner compensation is reasonable and in line with industry standards to avoid potential challenges from the CRA. Provincial and territorial taxes. In addition to federal taxes, businesses operating in Canada are also subject to provincial or territorial taxes, such as corporate income tax (CIT) or provincial sales tax (PST). The rules and rates for these taxes vary across provinces and territories, so it's crucial to understand the specific requirements for your business's operating jurisdiction. International considerations. If your business has international operations or transactions, there may be additional tax implications, such as transfer pricing rules, withholding taxes on payments to non-residents, and reporting requirements for foreign assets and income. It's important to consult with a tax specialist or international tax professional to navigate these complexities. Tax planning strategies. To optimize your business's tax position, it's wise to engage in tax planning strategies. This includes considering options such as income splitting, using specific tax credits and incentives, maximizing deductions, deferring income, and utilizing tax-efficient investment vehicles. Seeking professional advice can help identify and implement effective tax planning strategies tailored to your business's needs and goals. Airzole is a leading provider of comprehensive tax solutions. With our team of experienced professionals and cutting-edge technology, we offer efficient and accurate tax services to individuals and businesses alike. From tax planning and preparation to IRS issue resolution, we handle all aspects of taxes with precision and expertise. Our commitment to delivering personalized solutions tailored to each client's unique needs sets us apart. Contact us today at +1 647 232 7909 and discover how Airzole can streamline your tax process and help you achieve your financial goals.